Our overall lesson today I want to talk about is entries, which is one of the most important part of stock trading, guys. If you don't know where to enter a stock, you will not ever be able to make money on an overall play. So I really just want to start at the overall basics and kind of get a little bit more advanced as we move on. So basically, what is an entry? An entry is basically picking a certain price point to enter a stock, hoping that if you're going long on the stock that it's going to improve on price. You can sell at a higher price. If you're shorting a stock, you would hope to get a price at a higher area, and then it'll come back down and you can cover. But entry and exits is something that a lot of people do not know how to do correctly. A lot of people lose a lot of money because they enter at the wrong areas. You could say to yourself, for instance, let's look at STEM right here. For instance, STEM, you could see a huge spike, and you could say the day before, you know what, the stock is going to absolutely rip. The stock is absolutely going to take off the next day, and all of a sudden the next day you don't buy all the way up towards around 286. It runs up to 299, and then all of a sudden just crashes, way back on down for you. A lot of people do that as well. STEM, if you want to look at STEM today, STEM, a lot of people see this ripping all the way on up. They'll be watching it all day, and then all of a sudden they buy at 123. It falls all the way back down towards $1. So a lot of people do not know where to buy correctly on a lot of these overall plays, and it is an extremely important thing. You know exactly where to buy and exactly where to sell. Now, where do I buy entries, or where do I buy stocks, or where do I enter stocks? This all goes back to the very simple concept, guys, of support and resistance. Now, you should always be buying a stock around these areas of support and resistance. So I want to get to a good example today. Let me look around a little bit. Let's see about EBIO. EBIO, this is a great overall example of support and some resistance. Now, what we have here, if we go back to our overall support and resistance video, you guys can go ahead and check that out. That is also in the video library, support and resistance. We talk about what they are, where to buy these areas. There are 3 different levels of support and resistance, as we said. The natural, which is every 25 cents. The chart pattern, which is past history of a chart pattern. And we also have detailed, which is the open, the close, the low of the day, the high of the day, the moving averages, previous high, previous low, 52-week high, 52-week low, etc. Those are all detailed support and resistance. But the overall fact I want to get here, guys, is when you are entering a stock, you should always be buying it at 1, the break of a resistance line. So you should always be buying at the 1, the break of a resistance line, or number 2, the bounce of a support line. Those are literally the only 2 areas where you guys should be buying a stock. There are many different resistance lines, there are many different support lines, so it's not like I say those are the only 2 areas, and you might say, whoa, that's it? But yes, that's it, but there are many different resistance lines. There are definitely many areas to buy on support lines. The last thing you want to do, guys, is buy just in the middle of a support and resistance area. For instance, today, EBIO, let's kind of go back to EBIO. This was the stock we played today, and this was a very nice overall rip. Opened up at 237. This is a detailed opening resistance line, so that's a very nice possible resistance line if it went below. If you look at this did honestly go below all the way down to 231, and it came up and rebroke 237, and that's where we got our rip. So the open right here of 237, that's a resistance line. Now, when we break resistance lines, guys, volume comes into stocks. Resistance lines are like imaginary walls. They are where, for some reason, that stock traders will not be able to push that stock over that certain price point. They're like imaginary walls. So you want to wait for the overall resistance line wall to break, and when that resistance wall to break, imagine just everyone kind of leaning against the wall. Imagine a brick wall and everyone just kind of leaning up towards it. More and more people start leaning towards it. More and more people starts leaning. Now there's a huge crowd behind this wall, all leaning together until that wall tips and falls, and then everyone kind of falls through it. Everyone keeps moving forward. That's basically what it is. EBIO, we fall back down towards around 231. We come back up towards this 237 mark. We break that 237 mark. That starts bringing in some more activity. It only took a couple people to kind of lean against that wall until we broke that activity. But then we start moving on up. Now we come up to 250. 250 is a natural resistance line. So 250 natural resistance line. We have a lot of, people start coming on in because of that 237 wall break, and now we start moving on up. Now we break 250. 250 was the break buy alert that we were looking for on EBIO. So we start moving on up. 263, there's no reason to buy up here. Comes back down. Now we're at 250 support. Once we break through that wall, guys, once we break through that wall, old resistance is going to hold up as new support. So old resistance will hold up as new support. So where do we buy, guys? We buy stocks at the break of resistance or at the bounce of support. It's as simple as that. So you could see 250 holds up as the new support line. So right when we break that 250 mark, we come back down towards 250 support. Where do you think we're going to bounce? Right at this 250 mark before we start moving back on up, and we continue to climb all the way on up towards around that 50-day moving average at around 285-ish. That is a resistance line. That is where we can look to sell again. So it comes all the way back on down. But what I really want to stress here, guys, is your overall entries. Now, talking about where would be wrong entries, or let's go first, where would be our correct entries? Correct entries on this play. It opens at 237. I am a person who never just buys right at the open. I like to see where the stock moves a little bit. I like to get a little bit of a feeling. Buying right at the open might be a little bit of a gamble. That doesn't mean I want you guys sitting back from it for 20-30 minutes. I just want to see which way momentum is heading. If the stock can go up but has a little bit of a pullback first, let's look for a red to green move. Let's be smart about it. So EBIO opens up at 237, immediately falls back to 231. First entry point wouldn't be at 231. You guys don't know it's going to completely fall all the way down to 231. If it came back down to 225 right here, this is where we have 225 natural support. We also have past chart history pattern right here, possible entry right at 225. 231 though is not an entry point, guys. That is not an entry point. There's no reason to buy right here. You can see right here we have past chart history pattern of resistance. Old resistance is going to hold up as new support. Also 225, a natural resistance and support line. So the stock will be bouncing right here if it came down that low. Next up, so we start moving on up and we break 237. 237 is a little bit of a wall. So right when we break 237, a little bit of a red to green pattern. You guys can watch a red to green pattern lesson in our video library. That's where we start moving on up. Possible entry at the break of 237, number one. Starts moving on up. We only opened 237, 13 cents below 250, the next natural resistance line. 13 cents is not a big deal. If a stock ran 50 to a dollar, 50 cents to a dollar, then we'd most likely have a pullback. But we're only ran about 13 cents. That's really no big deal. So the overall fact, we can definitely look for this 250 break. It probably will break 250. We have some good momentum coming in, some nice strong people starting to push this on up, and we run up towards around 260. Number two spot to buy. Number one spot was the red to green move at 237. Number two spot would be at the break of 250. Break of 250, number two spot. Run on up towards 263. Now, what are you saying next? Okay, most likely 275 is going to be the next resistance line. 275 most likely the next resistance line, but it comes back on down towards 250. The stock comes back on down towards 250. Where is the next area to buy? Next area to buy is at this 250 line. Old resistance, we break. We start coming back on down towards 250. 250 is a support line. Possible buy entry right here at 250. And then from here, we start moving on up. We also form a little bit of a U-shaped breakout pattern of the high of the day. So we have the high of the day, 262. We had the 250 break. We had the 250 bounce entry. And now we start moving on up. If you're not in yet, you can look for the U-shaped breakout pattern, one of our go-to breakout patterns for the 262 entry. Break of 262. We're going to continue to move on up. 275 natural resistance is next. You can see a little bit of consolidation. Why is this red candle right here? 275 natural resistance. Continue to move on up towards we get up towards around that 50-day moving average where it holds up as resistance and starts coming back on down. But there are certain areas, guys, where you just should not buy. You should not be buying, let's say, at 268, 269, 270, 272, 274, 275. Break of 275, yes. You should not be buying at 245, 246, 247, 248. Wait for 250 to break. Right when 250 breaks, you should not be buying at 257, 258, 259, 260, 261, 262. Wait for that bounce at 250 again. And then you should not be buying at 258, 259, 250, 262. You can buy at the break of 263, 264. That's a U-shaped breakout pattern. So you should not be, there's certain areas, guys, and it might only sound like little pennies right here, but there are certain areas, of course, where you should always be buying. And I know that's right on a smaller little scale right there, so because I want to be able to drag in some pictures. A lot of this, guys, I want to go to some of our big time breakout patterns, kind of go back into these overall breakout patterns and show you guys exactly where you guys should be buying, exactly where you guys should be selling, and you guys can definitely look into this. So for example, here's a $1 breakout that we go over a lot. Here's a $1 breakout that we go over a lot. This is on the daily chart. So where can you be buying the stock? CANN, this had a very nice overall rip. Where can you buy the stock? You should be buying the stock at the break of $1. $1 is a natural resistance line. $1 is a natural resistance line. This is where you can be buying the stock. You can see it, nice little rip. $1 all the way up to 125. If you miss the $1 breakout, guys, that does not mean you are able to buy it at 115. You could see, where does it run up to? 125 natural resistance. So if you buy at the $1 breakout, you're going to be getting the most out of your money all the way up to 125. If you buy at 120, 123, 124, that is when you guys are going to get caught up in this red candle, when honestly, if you guys just waited a little bit longer and you know that $1 is a very strong resistance line, so most likely next to resistance line, it's going to come back down. Where do you buy at? Bounce of $1, maybe it went down towards around 196, bounce off $1, it runs all the way up towards around 110. You can buy at $1. You could buy at $1. You could buy at the bounce of $1. Eventually, we get our nice run up. Now we have our old high of the day of 125, 125, 125. Break of 125 is where we move on up. Break of 150 is where we move all the way up to $2. $2 natural resistance line until it starts coming all the way back on down. So there are certain areas you guys should always be waiting to buy on these overall plays. Always should be waiting to get in on these overall plays that are the most simple areas to really make the most out of your overall money. So let's get to a very simple idea as well. On these U-shaped breakout patterns that I always show you guys. These U-shaped breakout patterns that I always show you guys. BOSC, for instance. BOSC, we open up at around this 250 mark, kind of right at this 250 mark right here. BOSC opens up at around 250. What do we have going on? Well, we run up to 275. You can see we don't break 275. We come back down, right towards around 250. 250 is open. 250 is support now. That is an area where you can buy. 250 is a support line. You can buy at this overall area. We start moving on up. Where do we break? We break the old high of the day of 275. That is a buy now. You could see we get a little bit more volume coming in, more people leaning against that resistance wall. That's when we get our nice spike and our nice run on up. But we break 275. That's when we start running up to 325. You should not be buying at 315. You should not be buying at 320. If you guys miss this overall run, where is the next support line going to be? Think about natural resistance, natural support every 20 cents or 25 cents in the market. It comes back down. $3, guys, straight across the board. $3 straight across the board. It runs up to 325, comes back to $3 support. Do not be buying at 318. Do not be buying at 315. Do not be buying at 320, because most likely it just went on about a 50-cent pop. It's going to be having a pullback. Wait for the pullbacks. $3 natural support. Also, this is a very nice area that always usually holds on up. It runs right back up to 325. You can look to sell right at 325. 325 has not broke yet. We do not buy at 318. We do not buy at 319. We do not buy at 320. We wait for 325 to break. If you do not get in on that $3 bounce, you are not getting in on this play. Then it starts coming up towards back down towards around this $3 mark. You can look for another buy up to $3, up to 325. If you miss $3 again, do not buy in at 310 or 312, because sometimes times it's just going to crash. So you see this nice overall crash. You should not be buying any of this. No, 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 no. You can look for around a 275 support buy, especially as it starts coming on up. So you could be looking around this area, but you should not be anywhere in this downtrend right here until we start getting a little bit of an uptrend. Once it comes up towards around 315-ish or so, you could maybe see a U-shaped breakout pattern, but unless it broke 325, that is where you look to buy. 325 breaks, look what happens. Runs up to 350. You are not buying at 345, 347, 348. 350 holds on up. It comes back down. Old resistance. Old resistance holds up as new support. New support, 325 bounce. That's where you want to look to get into as it continues to run all the way on up. It just happens over and over and over again. So guys, you know, it's very kind of stock sniperish. That, you know, we use that term a lot around here, and you know, that is a very, very important thing. If you guys miss your entry, don't chase it 10 to 15 cents later, because sometimes it will not work out how you want. If you miss your overall entry, do not chase that overall play, you know, 10 to 15 cents later. We only buy, the only place that we're going to buy stocks, guys, is going to be on the break of resistance, when we break a resistance line right here, or when we bounce off support. And there's a multiple areas of support, guys. We have not only, you know, if we run up towards 325 and we come back down to $3 once, $3 twice, $3 three times, we can also look at overall support lines. We have our first 250 open, comes back, bounces off 250. So we ran up to 275, bounces off 250. Overall support right here. Runs all the way up. Where does it come all the way back down to? 275. Old resistance. Old resistance are going to hold up as new support. 275. Bounce play right here coming on up. Old resistance. Old resistance. Nice rip up towards 325 up to 350. Where do you think 350 is going to come back down to? 325. Old resistance. New support, moves on up. So guys, the thing I really want to stress out of this overall lesson right here, guys, is the overall fact that you should not be buying randomly at random places, you know, like 316 or 312 or let's say 409. These are all random places. You should honestly, unless there's a chart pattern, unless there is a 50-day moving average at one of those areas, you should really be sticking to you know, natural whole numbers, you know, every 25 cents. That is a nice area. And look at where the stocks open, where the stocks have opened and closed before. You know, red to green moves. I always love looking at these, guys. You know, some nice red to green moves right here. You know, NVFY opened up, let's say right here at around let's just say right here at the high of the day at around 420. You can see it immediately drop down. There is no reason to be buying anywhere here. You know, anywhere below this, there's no reason whatsoever to be buying any of this down here. We could say possible red to green move, but where's the best area to buy? The best area to buy is the break of this resistance line, guys. Break of this resistance line, 415. That's when we get this nice rip all the way on up. Again, you want to look at entries. We buy entries at the break of resistance line. That is the overall best area. Or we can honestly look at the bounce of support line. So, you know, if this is the open, let me get rid of this. If this is the open right here, you know, we come back down, red to green move, break of resistance, a break of resistance. Where do we fall back down to? Basically, it's support right along that open, and that's when it starts moving on up again. You know, it's very, very important, guys. Old resistance is going to hold up as new support, and it happens over and over and over again. I want to show you a good example on a mid-candle breakout pattern right here. But this is just so crucial stuff, guys. This is such crucial stuff. Actually, I'm going to show you right here on BSPM. You know, if we go all the way back, so right here, BSPM, I want to talk about a little bit of support plays right here. We talked about breaking on, you know, breaking resistance lines right here. This is resistance 303. We come up here, right around that $3 mark again, 303, right along that area, resistance. We start moving. We break resistance. We spike all the way up to 595. Let's say you guys don't know where to buy yet, and you see a big red candle coming in the next day. You're saying, hey, can I buy at 386? No. Can I buy at 323, 350? No. Look at the past chart history pattern. Where was old resistance? Old resistance, whoop, holds up as new support right at the $3 mark. That's where you want to buy. No point of buying at 348. No point of buying at 330. The overall stock is going to bounce right where its old resistance was as $3. This wants to be your entry down here at $3. We spike all the way up to $6. You see two big red candles. Should I buy at $4.50 for a bounce? Hey, hey Dekmar, three big red days all the way down to $4. Can I buy here at $4? No. Past chart history pattern. Old resistance $3. Whereas the bounce in the past $3 comes back down to $3. Big time bounce all the way up towards around $5.60. It's all about using your head, guys. You guys are smart enough to figure this stuff out. You guys can do this. I know it. Study up. We only buy stocks at the break of resistance. We only buy stocks at the overall support lines if we miss that overall breakout. Again, our overall play today, EBIO, was, where was it? It was at the break of 350. 350, and we had all this decline. We had all this nice overall area decline. We could have looked for a possible red to green move, but that wasn't really too big, that overall red to green move. So, we got in at the overall 250 mark. 250 mark, hey, I'm more than happy with a nice 40-cent run right there. 1,000 shares, $400. You have 2,000 shares, you're making it up towards around like $800. So it's beautiful, 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 beautiful. That is where you always want to be looking for your overall plays. So I wanted to go into this lesson today about really knowing where to buy a stock. We can go into another lesson in the future about where to sell a stock. It basically goes hand in hand. But this is very important. We only buy stocks at the break of resistance. We only buy stocks at bounces of support. We do not buy stocks at any other level, not randomly. If we see a stock just spiking on up, we don't buy it because it's moving on momentum. We buy stocks at our price. We play our game. We don't play the market's game. We play our game. So it's very important that you guys get this, get a good understanding of this, and study this video going in the video library tonight.